You're watching CLSA Research. Hello and welcome to a very special episode of That's Interesting. You're joining us at the CITIC CLSA Asean Forum in Bangkok, and with me today is senior economist and CLSA veteran Anthony Nafte, plus Dev Joshi, who recently joined us as our regional head of microstrategy. Welcome, gentlemen.
Thanks, Alex. Good to be here.
How has the forum been for both of you?
It's been fantastic. It's my first forum at CLSA. I'm really liking it. Good vibe.
Good vibe?
Very busy. Great to see so many people attending, and great to have a live forum after so long.
It's been pretty busy. Yesterday, I think I was moderating a couple of sessions. I had a session of my own. And so it's good to be busy.
Tony?
Great to be in Bangkok again.
What sort of discussions have you been having with clients?
Largely, I think it's more about the ASEAN, its place in the Asian growth story, and the supply chains. There is a lot of interest and excitement about ASEAN becoming, the part of the China Plus One story, and also a lot of investors are interested in thinking about ASEAN for next 10 years, not just 1 to 2 years. How the region is going to look like for 10 years. What do you think, Tony? What sort of discussions have you been having?
Well, the good news for me from a macro point of view is that clients, again, are very interested in the ASEAN economies. There's always something going on in the ASEAN economies, but it's not always investors are that interested. And at this point in time, they're extremely interested.
When did that change come in?
Well, it came when investors start thinking that your developed economies are now sort of going to start turning down, so the returns aren't going to be there. They start looking at emerging markets, and within emerging markets, this part of the world is really looking like it's offering great opportunities.
Imagine you think the same?
I think especially after, it's not really a pre-COVID. I think it's more structural, changes that are happening in the world. So that's where ASEAN is, getting its place back. From the equity market perspective, ASEAN markets have been more sort of value markets, and especially with the now interest rates going up globally. So this region is coming back into the focus now.
Okay.
Now there is more focus on, the cost of capital and the profitability and, the growth, which was the key criteria for last 10 years. So that's beginning to change with the change in the interest rate regime. So that's also, part of what Tony said in terms of developed markets. We are seeing some sort of inflation and interest rate change. So that's impacting equity markets, and ASEAN is now starting to come up on the radar screen much more than what it was doing probably 5-6 years ago.
Well, Tony, speaking of opportunities, you recently wrote a report titled Nickelodeon, and you were talking about the transition to EVs and how that's going to spur manufacturing in the region. Do you know any major players in Southeast Asia?
So Indonesia and Thailand are going to be the major competitors in the EV space in Southeast Asia. They have the manufacturing capabilities, and the Chinese auto manufacturers, their greater interest is those two countries, Indonesia and Thailand.
How important is the EV sector for this region?
So this is hugely important for Indonesia. This is going to provide a boost to manufacturing. It's also a spur to the investment cycle through rising FDI. In terms of Thailand and Indonesia, if we had to look at the sort of like the advantages here, Indonesia has a distinct advantage from nickel, being the world's greatest producer and the reserves of nickel. Affordability is a problem, so it's still very expensive for ordinary Indonesians to buy EV cars. So we would expect that in the first few years, the electric battery demand is going to be for exports. For Thailand's already got quite a well-developed automotive sector. They've also got the pickup trucks, which is a niche. So this is an opportunity for foreign auto manufacturers, not just Chinese, to challenge the dominance of the Japanese manufacturers in Thailand.
Dev, switching to you, how does it impact the equity market?
No, actually, I think the FDI story, especially the EV story, is also very important for Indonesian equity market. And it could bring about some structural changes to the equity market. Now, there might not be those many stocks directly, exposed to this story as of now. But the way it's going to change the structure of the Indonesian equity market is, You think from the equity market perspective, Indonesia is one of the high beta equity markets, right, in emerging markets. And the reason for Indonesia being a high beta market doesn't really come from the equity market itself. So if you look at from the market composition, right, the cyclical sectors are probably around 20% of the whole market. Consumer sector is big, telecoms is a big sector in Indonesia, and they are not really high beta sectors. Yes, banks, one of the largest sector sector in Indonesia, but Indonesian banks have very high ROEs, and they have probably one of the highest capital adequacy ratios in Asia, right? So they are not really that cyclical in terms of, from the balance sheet perspective. And Indonesian balance sheets across ASEAN are one of the strongest ones. And this is probably a lesson learned by the corporates after the 1998 Asian financial crisis, where they figure out, look, we cannot really control the volatility into the economic cycles, but what we can control is our balance sheets. And Indonesian corporates have done that very well. The reason Indonesian equity market is high beta is actually come from the country balance sheet, the balance of payments. In the past, a lot of the growth has been financed by the foreign portfolio flows, especially from the foreign bonds. So in the past, Indonesian, the ownership of the bond market was pretty high. The foreign ownership was pretty high, around 40%. It has come down to now 20%. But more importantly, going forward, as this EV story plays out, which means that the growth will be more financed by the structurally FDI flows rather than the portfolio flows, which means that it will not be as much dependent on foreign bonds, because in the past, when there is a risk on and risk off, these foreign bond owners, if there is a risk on in the market, they will buy Indonesian bonds, which will impact the currency and the bond yields. And if there is a risk off, they'll sell this, right, which will impact these things, these markets, and which will lead to volatility into the equities. So
if I can just reinforce what Dev was saying there. This prospect of a big increase in foreign direct investment in Indonesia is really hugely important, because in the past, and it will happen again, when you get a domestic demand rebound in Indonesia, that means that your current account, which has been in surplus for the last 2 years, is going to go back into deficit. And you need to cover your current account deficit by having much higher FDI. And if that happens, you'll get greater balance of payment stability, which means greater exchange rate stability, which means greater flexibility for the central bank, for Bank Indonesia, in order to manage their monetary policy. So just reinforcing what Dev was saying there, if you've got that background stability, then for equity investors, and in fact for capital market investors in general, this is a much more favourable investment climate.
Which means it could lead to re-rating potential of the Indonesian market. And also from the style perspective, Indonesia so far has been more sort of a quality and a risk market. What this means is, people usually try to time the market in terms of the risk on and risk off. But now if these structural changes come by, it will become more sort of a growth market. What we have seen in India over, last couple of decades.
This sort of discussion is what's top of mind for investors as well. We've seen that.
What investors are looking at, all these things that are playing out, how they will impact, these markets and economies over, structurally over next years to come.
Just staying on you, Dev, can you tell us more generally about the supply chain in Asia?
Yes, supply chains in Asia, that's one of, not just at the forum, that's been one of the key discussions, and not just in Asia, but globally as well. And one of the, if you look at a lot of the news that's been coming out over the last 4 to 5 years, that there is a sort of reshuffle that's happening. China is losing its place. Factories are getting out of China. They're looking for new home. That might be happening. But if you look at from the macro perspective, is over last 5 years, right, since 2016 when the US-China trade tension started, China has actually increased its prominence and dominance in the global manufacturing, in the sense that it attracts more FDI than it was attracting 5 years ago as a percentage of global share. It is exporting more, it has a higher share of global exports now, what it had 5 years ago. So China is actually more important for global manufacturing than it was 5 years ago, contrary to what a lot of people think. But it doesn't mean that ASEAN is not benefiting. ASEAN is benefiting as well, because some of these supply chains that were in China, now they are getting extended to ASEAN.
Tony, would you agree?
No, absolutely. I mean, it's selective though. So Vietnam is doing very well in terms of relocations. The big challenge for Indonesia, because EVs is definitely an important story, but what they really need now is a broader expansion of the manufacturing sector. The big challenge here will be to address policies that are hindering that. And here we're talking about the import substitution policy. So your manufacturers, which obviously require some inputs for their manufacturing operation, it's made very costly because of import restrictions. The import barriers are an effective tax on exports. It means that Indonesia has not been able to develop a domestic supply industry. So that'll be the biggest challenge. And in fact, there has been, both from the Japanese and from the South Koreans, saying to the Indonesia, you really need to get rid of those import restrictions if you want to become serious in terms of penetrating the global supply chain.
Okay, well, we just touched on Vietnam. You're about to do a tour in Vietnam, yes?
Yes, we're going to do a tour in Vietnam. And to Tony's point, actually, however way you slice or dice the data, right, Vietnam is, it looks like a clear winner. And not just from the data part. So we also at CLSA, we did a proprietary survey asking the manufacturing firms around Asia, right? Number one, do you really want to expand your production facilities? And 80% of the firms said yes, they want to expand. And their number one choice is actually Vietnam.
What was the number two?
It's Malaysia.
Malaysia, okay. Were you surprised by these findings?
Not really. I mean, it's not really that surprising because, we have seen that over the last 4 to 5, this is not like overnight stuff.
Yeah.
It's not suddenly, one morning we got up and we saw, oh, Vietnam's getting all these factories. That's a trend which has been underway for, over a decade. And these things, the supply chains, there are 3 things that matter for supply chains, right? Number one is just your climate. There is a reason why Indonesia exports palm oil or why Brazil exports coffee, right? The second is the economy of scale, where China comes in. And third is your, specialization. For example, why, a small country like Netherlands has a proper semiconductor supply chain within itself, because they're specialized in it.
Yeah,
right.
And that would be for Malaysia, a similar thing with the semiconductors.
I see.
So it's very difficult to move these supply chains. It's a very, even if you, and once these changes get underway, they get momentum. Right. So, for example, China, as I was saying, right, it's actually more important for global manufacturing than it was 5 years ago. The world is more dependent on Chinese manufacturing than it was 5 years ago, because, it's not really possible to reverse the, gains that China has made over last, 3 decades or more, perhaps.
Well, you're talking about the 10-year look. Is this a trend that you see going on into the next decade?
Yes, exactly. The supply chain, the relocations, these things, these, the FDI, these are very longer term decisions. So if you, let's say, if you think about FDI, there's a lot, if you're a company, if you want to think about expanding your supply chains, putting up a new manufacturing facility, there is a lot of planning process that goes behind, in making the decision. Once you make that decision, then, it takes a lot of time to, let's say if you want to go to Vietnam, then you need to find the land, you need to figure out all the purpose, processes and everything. Then you build a factory, then you start producing, right? So once you make a decision, you kind of stick to it. It's not, overnight you can reverse all these things.
It underlines the importance of policy. And the policy that I would highlight for Vietnam that makes it stand out is that they keep their economy open to trade and foreign investment. So Vietnam is a member of all the major trade agreements in the region. And so they remove those restrictions to trade, to foreign investment. And that, I would say, would be the most important. Dev was saying that it's very difficult to change these. So if as a country you wanted to try and improve and move ahead, then that would be one of the first steps. So for example, Thailand applying for membership of the CPTPP trade agreement. Similarly, Indonesia applying for membership of the CPTPP trade agreement. And as I've talked about before, the import restrictions.
I say, well, just going back to the tour, if these trends have been in place for quite some time and you're not surprised by the findings, what are you looking to examine or reveal to the people that are attending this tour?
So more in terms of Vietnam, again, there's this FDI story, but there's also a domestic story of Vietnam, right? I mean, there are over last year there are some domestic liquidity issues. There have been some changes on the political front, and the real estate sector has been through a bit of tough times, domestically as well. So on one hand, the FDI growth story is doing very well, but also there are some domestic challenges. So how do these things impact each other? Will FDI story will be so good that Vietnam will be able to tide over these issues, or will it be the other way around? Even for the FDI story, I think Vietnam is there is more demand of Vietnam right now as compared to the resources that they have in terms of land and labor. So which means they really need to move up the value chain.
Right.
And so that they can use their resources efficiently. Now, how soon they are able to do that, how efficiently they are able to do that, will go a long way in determining if Vietnam will be able to escape what is normally known as middle income trap.
Well, I saw you nodding there, Tony.
Yeah, no, I think these are the, Dev outlined, I mean, still very, in terms of like the FDI prospects, in terms of their positioning with the global supply chain penetration. But on the other hand, they do have a domestic crisis at the moment. So there are issues that they need to address. The only other thing that I'd add to what Dev was saying is that investors are kind of waiting, and maybe a little bit impatiently at this point in time, is when is Vietnam going to go from frontier market to emerging market, because the requirements that they need to do are pretty clear. And this is something that, especially facing this liquidity crisis right now, one would hope it would spur the Vietnamese government into action where they actually address what they need to do in order to become an emerging market, because then that would guarantee that they would get more foreign capital coming through on the portfolio side, which kind of reinforces that very favourable kind of balance of payments environment.
When do you think that might happen?
Well, I wouldn't even pretend to guess at this point in time, because it's something that they could do if they really were committed. They could do that within, let's say, 6 months. But if they're not committed to doing it, then it could take another 3 or 4 years. So it's all about when the Vietnamese government decides to get serious about addressing what they need to do to become an emerging market.
Excellent discussion. Thank you so much, gentlemen.
Thank you,
Thanks, Alex.
You've been watching CLSA Research.